Eric Verkler is the Director of Economic Development here, and he is a part of the panel, but also going to be leading the panel, leading the discussion. I know, he's got a dual role here.
Actor, director kind of situation.
Yeah.
De Niro did it.
So I think
so is that my kickoff?
Well, if you guys want to start by introducing yourselves and what organization you're with.
So Eric Verkler, as Brittany said, and I've been with Lewis County Economic Development for about 10 years, and I think, listening to this conversation, I think the other aspect I bring to it is having been a small business owner with my spouse, Heidi, similar stories to what I've heard today, and just part of what we do, I think, is consulting with people that come in and want to start a business, just to try to help walk them through that and work with organizations like Sarah to help somebody do that. So, Matt Cyber is with the Development Authority of the North Country.
Yep, and the Development Authority of the North Country was created by the New York State Legislature in 1985, so it's about as old as I am. And it was created for the reactivation of Fort Drum, basically to facilitate the infrastructure development between Fort Drum and Watertown. But we cover the Tri-County region, Lewis, St. Lawrence, and Jefferson County. And as a part of that, housing development and other business development just became kind of a natural segue from actual physical infrastructure such as geographic information systems, GIS, or the fiber optic network that we work on, and wastewater and water management systems. But I work on the regional development end and underwriting, and we do shared services with Lewis County, and that's a little bit of an overview of the Development Authority.
Steve Garneau was with her before today. I don't know if we spelled out the entire AEDC. You can do that for us, Steve.
No, AEDC, Adirondack Economic Development Corporation. We're located in Saranac Lake. Our service footprint is the northern 14 counties in New York State. So, we could be in Washington County or Oswego County and those points north. ADC is a nonprofit. We've been around since 1992. We've had lots of different activities that we've engaged in. We've expanded our services. We've contracted our services. Most recently, we've onboarded a new executive director. So our organization is filled with a lot of new and exciting things, and we're expanding our services once more and refining our service delivery of those things that we do. Primarily, ADC is a source of funding for startup and emerging, expanding businesses. We also provide direct one-on-one technical assistance and trusted guidance, very similar to what the services provided by the SBDCs are. What differentiates AEDC somewhat is that we have internal loan funds that we can use to leverage for business startups. We work by ourselves, but we also work within that partnership of conventional lenders and other organizations like IDAs from the various counties that we serve, and organizations like the Development of the North Country, like NCA. So we're very flexible and we work well in the same way. Yeah.
Thanks, Steve. And Eric Tupper, the other Eric on that end of the room, who is with AmeriQ Credit Union.
Yeah, so my name is Eric. I'm the financial center manager here in Lowville. I've been in the Lewis County community for just about 2 years, 1 month shy of 2 years, and it's a great place to be. We are one of those conventional lenders that work well with these not-for-profits. We are a credit union. We're local since 1951, 19 financial services or financial centers. What a lot of people don't realize with a credit union is we have a full suite of commercial and business products, from deposit accounts to commercial lending to credit cards, lines of credits. And we work well in understanding aspiring entrepreneurs' positions and what they want to achieve. We have a small team of commercial folks that really get to know you, what your aspirations are, and able to kind of work through those and build a strong relationship to help you guys grow.
Thank you. So I think one of the questions we have for the panel, and I'll maybe even set it up a little bit, and then, but the question is, what type of funding programs do you have for small businesses or entrepreneurs? And again, maybe my lead in, everybody's just kind of mentioned how we work together. Our organization, we have a very small loan fund, not a lot of dollars, and generally our cap to loan to a business is about $25,000, so pretty small. Somebody's not going to go buy Jeff's restaurant and get a loan from us and get the deal done. We also have a brand new micro grant program. Brittany's been putting that together and responsible for that, and just kicking it off today, where we can give a grant of up to $35,000 for a new business or an existing small business. There's quite a few requirements to it, but it's a great program. So how do we work together? A lot of times, if you can put together a loan package for a business, again, let's say somebody needs $300,000 in total loans to put their business, buy a business or start a business. How do we package that together? The first thing we like to do is get them to start at the commercial bank. Get them to go to AmeriQ or Community Bank or Key Bank. We have public funds, the rest of us. We don't want to replace the bank. The banks are in business to give loans. So let's start with them. And the bank might say, okay, you need $300,000, we can do $150,000. Well, where are they going to get the rest? That's when they work with the other agencies here, and my organization can do $25,000. So there's a small piece. Now, can we go to AEDC or can we go to DANK and put in the remainder to get to that $300,000? So how can we put a package together to get that business or that entrepreneur the loan and the financing that they need? That's how we all work together. And again, all of our programs may be a little bit different. Quick explanation of what ours were, and it was, yeah, we maybe a little bit as the facilitator, but the facilitator, I mean, Sarah facilitates a lot of this in the work that she does, or they might start with Steve. So wherever the business starts, we then help walk them through some of the doors to get the other financing they need. So other specific programs, Matt, that your organization might bring to that mix?
I handed out the sheets. I'm more of a visual person sometimes, and it's easier to, there's so many requirements in all seriousness with a lot of these programs, and they are different. So to try and compare them across the board, apple to apples, I made up a lending matrix on the back end that kind of compares everything, like interest rates, the things that can or can't be used for, and there's a variety of programs from farm drainage loan funds to you name it, really. Tourism fund on local level and on more of a state level. And the primary one that I administer is North Country Alliance, and that's what Steve was referring to before. And that covers the 7-county region, Jefferson, Lewis, St. Lawrence, and then in addition to Hamilton, Essex, Franklin, and I forget. Clinton. And so really, we all work together, and as far as loan sponsors, we go with like the county typically, or the IDA where the business is located. So in many cases, in Lewis County, it'll be Eric as a loan sponsor to the NCA and really work with the person to bring and put the package together. And then, by sharing the risk between all of our different entities, we can make the project happen a little bit easier, and some of the more riskier projects a little bit easier to swallow. And really, just beyond that.
Maybe a couple things Matt makes me think of, and maybe Steve, you could talk about riskier projects. Again, the public funds, our money is, in theory, we can loan to a project that's a little riskier or that the bank might not want to. So wonderful if you can talk about that a little bit. Another, I think, a great thing that Matt brings to the table, Matt has an expertise in banking and underwriting loans, so he does a lot of that behind the scenes work for our organization. For how many organizations do you do that for?
Like
5 or 6. The North Country Alliance uses Matt to underwrite the loan. Eric Tupper's bank does that themselves. I'm guessing AEDC does that also. Dank and Matt do that for our smaller organizations.
And going to the bank first gets a lot of that legwork done on the front end. The valuation of the business itself and really nailing that down, they'll and you know, that's where, you know, Merrick, you might be able to speak to more of the third-party broker opinion of a business, and how it's valued in relation to other businesses that have sold about the same size, etc., or a full-blown appraisal, like the real estate's worth X, the machinery's worth X, and you know, then really getting down to where how much goodwill is in that, and then whether that's, you know, acceptable to, you know, to you and be able to cash flow. And some of these things I don't want to kind of go over the same stuff that Sarah did, but in a lot of cases, Steve and I are looking at the numbers that Sarah runs. So using her is good because you're running your business. So in a lot of cases, if we're working on the back end for you, trying to get the business done, if it's an existing business, we'll call Sarah and she'll have the time to talk to us while you are working on the other side of your business or working on your business itself. So that's the upside to using those resources, is that we can kind of lean on each other and not lean on you as much while you're busy. I don't want to.
So, Steve, other specific programs, financing that you have at AEDC?
Well, ADC is primarily an SBA micro lender. Back in 1992, I think, when the SBA rolled out the microloan program, ADC was one of the first organizations that were invited to participate into the program. So we've been doing it a long time. We have other programs as well. We have funding from the USDA, U.S. Department of Agriculture. They provide two of our loan funds, the IRP and our MAP loan funds. We also have other loan funds from the state, Empire State Development. So, you know, depending on where the source of the loan funds come from, you know, it's important to keep in mind that we're not a public agency. We don't get our funds from the public by raising taxes. We borrow the money from the federal and state governments and we relend that money. So it's our money and we're fully responsible to repay that back. So it's private funds in a sense. But the way we use our loan funds is pretty much determined by the loan source funder. The SBA requires that we can only do a maximum loan of $50,000 for projects not to exceed $150,000. The IRP, their thresholds are different. We can go up to $250,000. However, they classify different things like eligibility of the borrower, what types of businesses that can be funded, what is considered ineligible. In many cases, things like lines of credit or direct agriculture loans are things that AEDC can't do. So when we get an inquiry, not necessarily a loan application, but when we get an initial inquiry, Matt will be on the phone and say, hey, I have this one particular client. They're living in Hamilton County. They want to buy a bed and breakfast. Is this a job that you can do? I'll qualify that yes or no, depending on the loan funds that we have. If it's something that we can do, then we're starting to get more information. You know, we don't have like one absolute system or process for every loan client. We evaluate each one based on their own merits. So it can be a time-consuming process, but that's our way to get intimately familiar with the individual and the business that they want to purchase or sell.
Eric, you told us a little bit about lines of credit, credit cards, etc. Other things at AmeriQ that...
So, to answer the question, directly, do we have programs designed for aspiring entrepreneurs? We don't, because our lending products are available to pretty much anybody, whether aspiring or if you've been in the business for 20 years. Basically, if you're an aspiring entrepreneur, we underwrite it a little bit differently. We look at you as a borrower, and we look at the existing business as an entity. We obviously want to, evaluate risk. We want to know what the business is worth. We want to know, how much the business is doing per year. So we fully underwrite that. But all of our loan products, commercial or otherwise, are open to anybody that walks in the door.
We have a question from online asking about how your interest rates compare to a traditional bank's interest rates in terms of your loan product?
Sure. So as a credit union, we're not for profit, so we don't have a board of directors or stakeholders to pay. So our interest rates are typically a little bit lower. Commercial real estates are really sweet spot. When you're buying a building or something along those lines that we can lean against, our interest rates are a little bit lower. But it depends on the borrower. So the quote rates would be a little bit of a stab, but typically a little bit lower than the typical commercial bank as far as our rates go.
So my next question, and Eric was just kind of starting to get into this, is what might you be looking for an entrepreneur that's seeking a loan? What types of qualities are you looking for? To approve a loan with them, what things are you going to focus on? You talked about that a little bit.
Yeah. So again, if you're an aspiring entrepreneur, we underwrite it a little bit differently because we look at you as a borrower. What's your existing cash flow? What's your experience? It's almost like a job interview at that point, right? Because you may or may not be going into a business that you have little or no experience in. That's a risk for us, right? So if you're opening a garage and you've never turned a wrench, it's something kind of that we have to look at. We also look at the existing business. What is the existing business? How have they performed? How have they done year over year? And then we're gonna, if it's a mortgage, a building, something like that, we're gonna do an appraisal on the building. We're gonna look at their inventory. We're gonna look at, their staffing and see how they handle their day to day. We want to fully underwrite that. Obviously, as a bank, we want to mitigate risk, which is why we really like working with these guys too, is because they mitigate a lot of the risk for us when we partner with them.
Steve, you have an entrepreneur or somebody looking to start a business or buy an existing business. What things do you think about and want that entrepreneur to show you?
Well, it usually when we're meeting for the very first time, there's a kind of like a informal interview process. I'd like to get an idea of what this person's ideas are, either for a business. I'd want to know if they're going to maintain that business as it currently is, or if they have things that they want to change. I'd also want to know what the credit history is of the borrower. Oftentimes there are some things that may appear on a credit report, like unsatisfied judgments, that really create barriers for us to lend. So we want to ensure that the individual that may be anticipating a loan understands what condition their credit is in. When we're lending for a business, there really is very little separation between the business and the individual themselves. So they really need to be involved intimately in the operations, or at least have an understanding of a specific industry that they're working in. Like Eric says, it would be really difficult for us to understand someone wanting to buy an auto repair shop if they've never twisted a wrench. So, we'd want to have that direct experience there, or at least have some kind of an arrangement where the seller of the business may be staying on for technical advice and support.
Speaking along those lines, so if you're the key person for a business, and we're talking about the things that you would need, personal guarantees, a lot of people get limited liability companies and are like, okay, that's my way of shielding myself, and it is, but if you're going through some of our programs, and the personal guarantees will be required, and then to that, the skill set, you're the person that's running the business, you have the skills, what happens if you're gone? And that's where key man life insurance, or key person, life insurance comes in. And at least for the NCA, North Country Alliance, we require the key man life insurance in the amount that you're requesting for the loan. So if you were to pass away, and actually very early on in my career, I was like, really? Like, how often does that happen? And we had one person and it happened. And honestly, the reason why that business is still functioning to this day in the way it is because of that. It took a lot of the debt away, where I don't know if it would have survived otherwise. So although it's, and it's good for, especially business where you're in it with your spouse or some scenario like that, takes a lot of burden away. Like if something happened to them and you're running with them, and then you're trying to get yourself back together, let alone keeping your business going in that circumstance. So that's one of like the curveball things that does take a little bit longer to get some of these approvals through, because you're not only are you waiting on all these other things, you're waiting on your life insurance as well. So actually just carrying a policy in yourself is good practice. And then if you run into it, then you can just simply assign the amount to the lender, and then boom, you're done. And that takes often a long time to underwrite. So that's kind of the curve.
A couple thoughts I might have on what do you look for in an entrepreneur, someone trying to buy businesses. You've talked about it before, is that experience. I mean, maybe they don't have direct experience running a restaurant, but they've got some business experience, management experience, about Jen's discussion on the people side of their ability to manage that. I mean, looking at that experience and why might that person be successful, what's going to make them successful in buying that business. I don't know that we've talked about this much in buying existing business, but the business plan, what the work that Sarah does to help someone. You think about that a lot more with like somebody brand new who's going to start the Chicken Shack restaurant. You really need your business plan to make sure that's going to work. Well, if you're buying Jim's restaurant, it's been in business for years. Are you going to do a full business plan? Maybe not, but you still need some sort of analysis and some sort of strategy. Here's the business today. What if I buy it and I've got to take on this debt? How is it going to be different? So it might not be a full business plan, but you still need to do some analysis when you're buying a business. I'm sure, Megan, you had to give some thought to, I'm buying this building and this business. I don't know if you bought the building.
I didn't.
No, but bought this business. What's my analysis to make sure I'm going to be able to be successful?
How do you get some of that analysis to know like what market trends may be coming into play, that type of thing? Where do you go to get that kind of stuff?
Sarah, any thoughts to that? I mean, that's or anybody else?
Google.
Yeah. Any type of research you can be. I think it kind of depends, Terry. I mean, what is the business? Any type of information you can seek. If it's ag specific or restaurant specific. And Sarah might have some ideas on where you
trade associations, similar businesses in other areas that aren't going to be a competitor. Lots of times they're willing to share information with you. And
online of course, but Morningstar is also a good one to go to, more on a national level though, in that circumstance.
Yeah, but definitely important. I mean, that market research, that's a key to so many different. I'm going to start a business ideas. You got to know what you're going to sell $300,000 a year. Okay, where's it going to come from? If you can figure that out, that's a huge step.
That's really your number one.
Yep.
You got to have customers.
Figuring out the expenses are probably pretty easy. Sarah does that stuff and helps people do that stuff every day. It's how much money are you going to make? That's the hard part.
If I may. If you're considering buying a business, chances are the seller of the business that you're trying to buy is going to have a wealth of knowledge and insight with regard to who your customers are, where they're coming from, what their age groups, what their average price or cost or sale. They're going to have that information, and it's going to be readily available to them.
Go ahead. So as somebody who's relatively new to the area, it sounds like there's a lot of possibilities. So in terms of like a first step, would you recommend contacting the SBDC and then they would filter us kind of to the right kind of person, or should I be approaching individual groups individually, or how would you recommend an aspiring entrepreneur sort of navigate this?
I'm probably going to give you a biased answer.
Yeah.
Start with your local economic development agency. But I think if you get introduced to any of the agencies, the people in this room, they're going to help. That's our goal. Our role too is just direct.
Got it. So you could start with any, and then you'll be kind of pointing to the right. Okay.
Someone comes in our door, the first thing we do is we introduce them to Sarah. So if she gets somebody, and maybe they need to talk to us first, or maybe they need to talk to Steve first. So we all work very well together, and I think that first contact,
Could be anybody.
We'll get the person going in the right direction.
Yeah, I think it's important to understand that we've been in this business for a long time. So essentially, we're the gatekeepers of the money. And there is a lot of money out there for people that want to start businesses. So that's not the only restriction from you being successful in business.
And generally speaking, at least from everything I see, for the most part, the people that we present these things to, business reports to, they're looking for the project to get all the ducks in a row and then go. Not like piecemeal everything together. You're better served if you start out planning and then start. I mean, in some cases you might be able to piecemeal it together. If you're doing like an online type business, that's more of your personal. You're making things in that scenario, and you don't need a lot of working capital. But if you're starting, then typically you just want to get everything together. Then the project's happening.
Yeah, I think we're all going to kind of, look for that very strong business plan first. There's a slew of different resources for that. But that's kind of your first step, I think, is having a very strong business plan.
I have to give one example I've been thinking about the whole morning that many of us in the room have been working with. It's a person that's I've been working with for 4 years trying to buy an existing business. And it's kind of a unique business, and it's very location-based, snow-based. So I've been trying to buy an existing business with one of those owners that's owned it for 40 years. And the owner, so they were going to buy some land and buy a building, which probably needed to be knocked down, and buy a business. Well, what are those pieces worth, and what was the owner asking? So, for years, they've been working with Sarah to develop the business plan to see, does it make sense, and I need to get my financing to pay this $500,000 price. Well, the bank wasn't willing to give them the financing. The $500,000 was probably too much, a variety of factors. So time goes by, and they just keep trying and redoing the business plan. And
Plan B, Plan C.
And, eventually just got to the point where buying this business from this existing business just isn't going to work. They went and they started their own. Bought some land, and they're going to build a building instead of buying some land and knocking down a building. Redid their business plan with Sarah. Went through all that. They went to the banks. I mean, they've now got a loan package. They had some bank financing. A couple different programs through Matt, a couple different loans through Dank, and then one small loan through us, and they've got the financing they need, I think, and going to be cranking this up soon. So every situation is different, and if you're buying a business, if you can get that's a great option, but sometimes it doesn't work out, and you go to Plan B.
I made just one point to first when she mentioned seller financing and then allowing for to put money into the project. When you're discussing that with them, ask especially if they're willing to subordinate to the bank and then to us, which means that they're behind all those things. So if you fail, then they're literally the last person that does get paid. So that is a big factor in some cases if you're going to pursue the seller aspect of financing.
Other final thoughts, or I'm sorry, go ahead.
I do have a question
Sure.
for the ADC. Do you have programs specific to the Adirondack Park?
Well, I don't want to say yes. We don't like interact with DEC or advocate with the APA or anything like that. The Adirondack Park, we are they're fully located within our service area, so all areas of the Adirondack Park are served by ADC. But we don't have anything specific just for the park.
Any other last tidbits or thoughts for an entrepreneur, ways to go about getting their financing? Anything else that you haven't mentioned already?
A lot of people think you have to go to a bank to get a loan. I would love it if you came to my credit union to get a loan. But you don't have to go to a bank to get a loan. There's plenty of sources available for people to get started with businesses, grants, lending from these guys. There's a lot of opportunity, and a lot of people will think there's no way I can qualify for this loan from a bank. I think we all kind of look at things a little bit differently and underwrite things a little bit differently. It's always good to get to know the borrower, but if there's the passion, take the risk. In my opinion, it's.
Other questions?
What kind of strings are attached to some of these grants?
There are generally strings attached. With the loan programs, it's probably pretty typical. Again, there's probably most likely going to be collateral required. We've talked about a lot of them, personal guarantees, possibly life insurance. So the loans are relatively standard. Grant opportunities are not easy to come by. We work with them a lot. There's some federal programs, there's state programs. Not every program fits each type of business. And then the ones that do fit might have some requirements. The small business grant that I mentioned earlier that Brittany's working on, there are a lot of requirements. It's actually federal money, so it has to be a new business or a very small business, less than 5 employees. And then there's income requirements for the owner or for the employees.
You can only use it on equipment or fixtures. You have to take an entrepreneurial course through the SBDC. Just a lot of reporting and
A lot of grants you have to be able to pay out of pocket and then you get reimbursed.
Yes.
And that's a drawback for a lot of people.
That's a key point. I mean, grant money is great, but as Sarah mentioned many times, if you have a $100,000 project and you're going to get a $40,000 grant, you have to pay the $40,000 first, and then the agency will pay you back.
ADC also administers grants on behalf of communities and municipalities as well. And that one point can be a stickler because oftentimes you have to fully realize all of your obligations before you're entitled for reimbursement. Mm-hmm. So if your project is $100,000 and you're expecting $40,000, you have to pay the $100,000. You have to achieve your milestones or what your minimum requirements are to be reimbursed for the grant. So
wait a period of time.
And you have to wait. You have to wait because there's several agencies that you may have to work through.
And that sounds scary to a certain degree because you're like, oh, I'm just going to have to upfront this money, right? But what the NCA does as well is on the other side, it's like, okay, we'll play somewhat hero in this sense because we'll bridge that. If you have a letter from New York State, from Empire State Development, you've got this grant and, you go through it and you're like, hey, I've got this grant, here it is, and it's assignable, meaning we can take it, and if once you execute the grant, we can bridge the grant funds for you, and at a low interest rate, just interest only, while we're bridging the grant funds. So there are ways to get creative with that if you just don't have $40,000 sitting there for a grant. So.
And we will kind of do the same thing. The interest rates are probably a little bit higher, but we're less restricted as the amount of funds based on the borrower, of course. So we will bridge as well in order to kind of get you through to that period of time where that grant kicks in.
I think it's important for prospective entrepreneurs or sellers to understand that the place to get that information is probably through one of us. Because we're going to be knowing what's going on in our community, what the other organizations have for resources and opportunities and things like that. So,
other questions? Sure.
So a lot of the folks that we've been sort of collecting their stories for the Center for Business Transition, the original plan was to buy the whole building and the whole business and to do all of this and come back and maybe decided instead, because they couldn't get a loan or couldn't make that work, they were going to go back and lease the building and then buy the business. They've changed their tactic a few times in order to make it work. Should folks be afraid of coming to you multiple times if it didn't work out the first time?
No, it happens all the time. Like some of these things we've been working on for five years, 6 years, and 10 different iterations.
Again, that's what our role is. That's what our job is. I mean, we're here to support, and that's the goal. In Lewis County, Brittany probably mentioned this early on. I mean, if we can grow small businesses, so even if it takes 5 years, if it's successful, that's perfect.
You get that phone call, it's me again, I came up with another plan. All right, let's do it.
Yeah. And in many instances, she knows the difference automatically between the numbers before. She looked at them before. She's like, these are the main differences. It saves a ton of time.
This one might work.
Yeah.
Other questions, comments?
I have a question, just an opinion from any of you on using like your personal house for collateral. I would tend to be the wife that says no. I'm not doing that.
I might let these folks really give some good thoughts, but I mean, you know, with a personal guarantee, in a lot of cases, that just becomes the situation. But if you to specifically attach it, I would try to avoid it if you can. But what's your thoughts?
So mine's probably different than theirs, right? You, just for example, like if you borrowed money against your house, your interest rate's going to be lower. It's less risky for me as a credit union, knowing that you're putting your house up on this. This is a real thing for you. I don't recommend it always. I don't think it's in people's best interest all the time. But in certain cases, it definitely works, and it definitely makes the most sense. Especially because of that interest rate, that payment. Maybe they need the lower payment to kind of get things going and have that cash flow.
And that makes me think, a lot of that is a personal decision. And you think about if you're confident, here's your business, you've been through the business plan, take that confidence into your business and say, I'm going to put my house on the line for this. It can help you out a lot. Make sure you get that loan, lower interest rate. Be confident in your business plan and do it. So,
like Eric said, oftentimes it ends up that way anyway.
Yeah.
It's a better motivator too.
Yeah. I think it's important for people to understand that we're not in the business to take people's homes. That's the last thing we want in our portfolio is your home. In fact, we're going to do everything we can to ensure your success. And whether that's being more flexible with the repayment schedule, to be more closely timed to the seasonality of your business or whenever you expect revenues, maybe periods of interest only, or even straight deferrals of payment. Oftentimes we'll be invited to come to a business to make recommendations and suggestions of how may they improve their business. So, that's always part of our role. It's not just the money part. Our job is to help ensure business survival and successes.
And to a certain degree, you'll know. If you really know, once you nail down that valuation, and then how much money you need to buy that business, and if it's not we call it a 1-to-1 ratio, meaning the valuation of the business is at least equal to what you're taking out, then you almost know that no matter what lender you're going to, that they're going to maybe ask for a little extra skin. So then that might come down to the house. But if you're fortunate enough and have like a rental property or something like that, and you don't have to put your house itself, that's also a good scenario.
make sure you have a place to live in the business. All right, I think we're pretty much at the end of our time, and we're going to have a little wrap-up discussion, I think. And we'll get off these comfortable chairs.
I just got mine to be still.